Thank you and welcome into this video. I would like to walk you through how you can practically invest in Nairobi Securities Exchange. So before we move deep into this video, I've decided not to use the conventional PowerPoint site and decided to use the NLC interface itself. So basically, in order to understand this, I would like us first to understand what are stocks. In layman's language, stocks or buying of stocks is basically buying into an ownership of a certain company. What do I mean by that? You can take a scenario of Absa. Maybe you buy 100 stakes in Absa. So that means you are buying into the ownership of Absa. So you'll be able to enjoy the benefit in terms of profit when they increase in Absa Bank, and you'll be able to reap those benefits in the Nairobi Securities Exchange. So basically, this is the whole idea of investing in the stock market. So you try and come and buy into ownership of an idea like a company like Absa, and you'll be enjoying the profit margin which they make. Maybe if they diversify their portfolio and the profit margin increase, there'll be a reflection in the Nairobi Securities Exchange because we are viewing the earning per share, which is usually derived from the profit after tax of a company. Basically, to move from that, you need also to understand what is really stock market even before starting investing in this market. So stock market is where all listed companies in Kenya come and start trading. So this is the market of listed companies. This is where they come and trade value in the Nairobi Securities Exchange. So this is the whole analogy of what you need first to understand before getting into the stock market first. Then the second thing you need to bear in mind, you need to understand, why do I really need to invest in the stock market? That is the question you need to first answer even before proceeding and starting the process of buying stocks in the Nairobi Securities Exchange. One thing, we have two different investors in the Nairobi Securities Exchange. One investor is the long-term oriented investor. The second investor is the short-term oriented investor. What is the difference? Short-term investor, they usually enjoy the short-term fluctuation in the market. A practical scenario, I can take a scenario where Absa shares were trading at around 28 shillings like 3 weeks ago. Right now, they are trading at around 30, let's say 33.25 average. Though the last price was around 33.30, as you can see here. This is where I'm checking. So I'm assuming you have never interacted with the Nairobi Securities Exchange. So now this short-term trader, you come and now execute when the price have risen or have grown, or now there is a premium which they can enjoy of the difference between 33.30 and 28, which is around 5 shillings, which is a bigger margin depending on the shares which you have with this bank. So this is the whole analogy of the short-term trader. So they execute their shares more frequently, like even there are daily traders who can execute a trade even during some days or during the day. When they see a short-term fluctuation, they execute and sell their shares and make the margin. So that is the whole analogy of it. Now we come to a scenario of a long-term trader. So long-term trader is they invest in the vision of a company. We can take a scenario of like equity. Equity, you can notice that their shares right now, their last price which closed was around 86.75. So this last price, maybe we assume that is the offer price which we have, and there is the offer which you buy these shares in. So the long-term trader will buy these shares and then see how equity is diversifying in the African region, and then we'll try and we'll presume or we speculate these shares may rise up to 200 shillings come or 500 shillings come 10 years, and now he invests in this. So they will not continuously execute this trading. They will leave their money stay here and view as the money grows after a very long time period, after a higher duration of time, after a long period of time. This is how it usually works in the stock market. So you need first to assess yourself. Do you need to do short-term trading based on your need or long-term trading? So that's why you usually need a stockbroker or a consultant to first advise you and understand the needs which you need. So what I usually recommend, in case you are very new in the stock market, because this is technically sensitization regarding the stock market, I would advise you play the long-term game. You never lose with it. Play the long-term game after choosing the best portfolios in the market. But in case you are like us, maybe who have the background in the stock market, you can do the short-term trading where you can enjoy the short-term fluctuation after doing some various market analysis and know what is the best time to execute. So that is what I would advise. But this is personal advice on what I think is usually important. When you are starting, first focus on long-term game in the stock market. But when you understand and you understand how the market is interpreted, now you can go ahead and start doing the short-term execution in the market. So let us proceed now and understand what you really need to start investing in the stock market. So what you really need, you need to open a CDS account. So what is a CDS account? So this is a central depository system. System actually, it is, you open it with the central bank or CBK, which usually helps you to buy and sell shares in the Nairobi Securities Exchange. So long are the days where you needed to go there, queue, and then given a form which you filled, which was involved by a lot of corruption in case you need this form to be passed. Now you can be able to do this very easily using something we are calling Dosika app, which is already, you can be able to download it on your Android device. But what I have noticed, it is hectic to do it when using iPhones. So iOS is not supporting it very well. But with Android, you can download the Dosika app, populate your primary data, which is what you basically need. You just need your ID, your KRA pin. You also need your passport. You can have your bank details data. Also, you can have your I think I touched the ID. So what you need is your ID, KRA pin, your passport photo. You can have your bank account with you, a bank account number with you, and you're good to go to register with CDS. You also need an active email. I think that one is always obvious. You just need an active email so that you can be able now to create a CDS account. And when you create a CDS account, you submit, choose the best stockbroker, and a good stockbroker will trigger the success in trading in the stock market. So you should decide the best stockbroker and a reliable stockbroker, since you don't need to get in the scenario where you can start losing your finances. So you need to choose the best stockbroker in the market. So in case you need to know the best stockbrokers, they are listed in the Nairobi Securities Exchange website. You can get them. But in case you need more insight regarding this, you can reach us and we can be able to have a discussion about it, and maybe help you to create a CDS account in case you get it problematic to create one. But it will take a duration of 5 days to fully complete creating a CDS account, which you can use now to log in, like in this interface which I am. Like in my scenario, you can use I'm using a stockbroker called Faida Investment Bank. This is my stockbroker, which is so to choose a stockbroker, first you need to assess the ease of access of that stockbroker. That is when it comes to accessing the system. Like in this scenario, you can see, like when we take a scenario of Faida Investment, they have an app and they have a website. So the ease of access is something which you need to assess how they have been able to progress when it comes to technology. So you need to assess some scenarios like those so that you don't get a hectic. Sometimes you are unable to log in. So those are some of the dynamism which you usually try to check when choosing a stockbroker, the reliability of them, how they have been reported in the stock market. Try and do some background check in that. So I don't want to dive that much on that. So in case you need that information, you can reach me at a personal level so that we do it together. So now I want to explain simply the stock market interface. So to explain the stock market interface in this sense, stock market in Kenya usually partially open at 9, but fully trading usually start at 9:30. That is where you can be able now to execute from 9:30. But from 9 is usually partially open, and they close at 3. That is how our stock market usually operate. So that's like right now you can see it is open. When you open it around 9, it will tell you pre-open. So it has not fully been opened from here. I think you can see my cursor. That's why I decided to put it as a practical guide. From there, you need to understand some basic interface here. So these are all the companies which have been listed in the market. So they are here. You can be able to see them. All the companies listed in the market, they are here. So I need to come here up where we have the first company which is here, which is Absa. So first thing first, you need to know how we interpret these markets. So I would like to make this interpretation as simple as possible that you can be able to interpret it yourself and do the execution yourself. So here first we have the symbol. This is a symbol of the company or the institution where you are investing. Like this, you can see this is Absa, this is BAT, and so on and so forth. So you can come here and see we are having a red arrow pointing downward. So what does this mean in layman's language? So in layman's language, it means that in this market right now, when it comes to trading on the stakes of Absa, we are having many sellers who are willing to offload their shares as compared to the buyers who we have. That is how simply you can interpret this. So from there, I'll be able to explain this deeper as we continue. So you can see something here we are calling the rust price here. You can see here rust price. So this is as it interprets, this is the rust price which was there. Basically, this is the price which was previously there. Rust price is this one. And this is the rust quantity. It was 3. So it keeps on fluctuating. So you can see the bid quantity is 40. The number of bids which are there now. The bid price is people are bidding to buy these shares. So there are people who are bidding to buy these shares. So they are bidding at a price of 33.20. So the offer quantity here in our case, you can see it is 261. So this is the amount which is in offer. And the offer price which the sellers are giving offer, they are giving an offer of 33.25. So to understand this scenario, here we have the buyer. The buyer is saying, I'm buying these shares. This is the bid price. Since the buyer is the one who is bidding, he's bidding these shares at 33.20. Now the seller is saying, no, I need to make a margin. I'm selling my share at 33.25. So that is the whole meaning of it. So the day open, so the opening of the day, the shares were trading at 33.40. And the low level which the share can move, they can move to 33.10. And the highest is 33.50. So that is the simple interpretation. So the previous close was here. It was 33.40, which is there. So the market capitalization is not provided here, but I will answer later why. The day for Absa, that is not there. As you can notice, there's no market capitalization for Absa, but I will answer this question later. So when we come here, I would like to explain a concept here. I explained a concept regarding this red arrow pointing downward here. Can you see this arrow? So I would like to explain that concept using this section here. So you can see that the total bid quantity in the market, the buyers who are willing to buy shares in the market is 109,452, which is 109,452. But the total offer quantity, which is the market, the sellers who are willing to sell their shares in the market, they are 629,378. So what does this tell you? This market is like we can take an avocado market. There are a lot of avocados in the market which are to be sold in the market, but there are no buyers. So as you can see, the buyers are very low as compared to the sellers. The sellers are very high, people who are willing to offload their Absa shares. But a lot of people is because you can notice a lot of people, they are playing the short-term game. So they have realized the fluctuation in Absa where the shares have risen from around 28 shilling to 33. This is quite significant amount depending on the shares which you have with Absa. So a lot of investors, they are willing to first offload and realize that gain now. So total trades, these are the total trades in the market, which are basically right now they are 277. So The volume of trade is 98,692. So the turnover, so this is the turnover rate in Absa, is around 3,296,307. So the way you can interpret it, foreign buys we have 0, foreign sale we have 0. Weighted average price is provided here, and that is how we usually interpret these details. So I would like us now to interpret another one here, which is somehow different, less significantly different to what we have now in Absa. So already we know here we have the symbol. The last price for this one, for this company, AMAC, is 112.00. Last quantity is 2. So as you can see, the bid quantity is 4. The bidder is willing to buy these shares at 110.25, but the seller has provided the offer quantity, the quantity which are being given out by the sellers who own shares in AMAC. Is it AMAC? They are 187. And now they are saying, no, we need to realize something. So we are selling our shares at 112.20. So the day open, when the day opened, it opened at that price of 112 per share. The lowest it can go is 100, and the highest it can go is 112. So the previous price was the previous close, the price was 105.0. So the market capitalization for AMAC is 14,118,710,671. The day close is here. You interpret the same way. So what I want us to show, I want to show you is that in this market you can notice now the arrow is showing green in color. So it means that we have more buyers than sellers who are willing to sell their stake in AMAC. So this tells you more about how this company is performing. So when you come here, I want to show you something I demonstrated to you here, and you'll be able now to understand the difference. So you can notice here, the total bid, people who are bidding to buy, they are 2,946, and the total quantity of offer is only 337. So that's why you can realize there is a green mark showing you that the number of buyers is exceeding the sellers. So there is now a speculation that this shares price may rise. That's why people are rushing to buy them, and the one who have shares for AMAC are willing to hold them for themselves. They are not willing to give them away. They are speculative or of positive effect in the market. So the total trade, there are 16. The volume of the trade is around 310. The turnover rate is around 34. You can notice in this company, the turnover rate is less as compared to that one of Absa. And that is another thing which usually informs us when buying shares in the Nairobi Securities Exchange, and also based on the option which you choose, either as a short-term trader or a long-term trader. So these are some of the things which usually inform us on the companies which we need to buy based on our need in the stock market. So foreign buy, they are 0, foreign sell 0. So we can scroll and come here. I think that one is enough for us to understand about this interface regarding this. So we have this one. This one is an equivalence mark, which is a neutral market, where technically no significant trade is really taken here. So you can notice the number of people who are selling shares and the buyer, they are equally the same, and nothing much is really happening in these companies. As you can see, in most scenario, there is usually less significant difference here. Let me show you what I want to show you here. Something here. You can notice the total bids, they are here, and the total quantity is here. So these are the number of bidders and the number of quantity which are in offer. So they are more or less the same. So no vigorous trade which is usually take place in these companies which have this neutrality mark, which is the equivalence mark. So this is a neutral mark. This is go up and this is go low, as we can be able to interpret it simply. So based on that scenario now, I would like to walk you through also some of the interfaces which you require to see in your depending on the stockbroker who you are using to trade in the Nairobi Securities Exchange. So I'd like us to first come to where we have report. Like when I'm using Faida Investment, I can be able to get statement, view my portfolio valuation, view my stock holding. So you can, I don't think it's harmful. You can view my stocks here, some of them here. You can see, can be able to manage your stock, contract, order reports. So you can also have the available fund. You can see the available fund which you have, which you can use to transact. You can also do fund transfer here by just using the interface. And you can also deposit money into Faida Investment in order to start buying shares in the market. But bearing that in mind, so this was just an introductory course regarding how you can become part and parcel of investing in Nairobi Securities Exchange. So in the next video, I would like to take you through how you can buy and sell shares in Nairobi Securities Exchange. So basically, thank you for watching. In case you have any query regarding how to open a CDS account, any query regarding investment in the Nairobi Securities Exchange, you can reach me using my personal contact in the description so that we can have conversation and advise you on what you need to do, the best stockbroker, and anything you need to know regarding stock market. So thank you for watching and have a nice day ahead.